Hi everyone, you're all very welcome to our latest Alpha Capital Group trader interview in our Interview Here series. Today we have Shane Lauder, one of our funded traders here from the UK, the man from Wales. How are you, sir? How is things? How are you keeping?
I'm really good, thanks, Jerry. Yeah, really good.
Great to have you on board today. So Shane, obviously I know yourself many years now, and obviously through the funded route, and it's absolute privilege and pleasure to have you on today. I suppose today's call is obviously just about your journey, your experience, and how you perceive and how you review the markets.
Mhm.
I suppose the best place is to start with any interview is really to kind of, do you want to tell us a bit about yourself and how you kind of got into trading and your past?
Yeah, absolutely. So, yeah, my name's Shane. I'm originally from New Zealand. I moved over to the UK originally in 2006. Went back for a few years, and then I came back in 2017. Um, and so I currently reside in South Wales in a fairly rural countryside. Um, I work in recruitment currently. I've worked in sales for too long, 20 plus years. And I got into trading over COVID. I was quite disillusioned with my job and my career, and at the time, and a little bit bored. So I decided to learn something new.
And obviously throw yourself into it full tilt in terms of.
Yeah, yeah. I did what every sensible trader should do, and quit his job and decided to learn trading full time.
Yeah.
Um, yeah,
Yeah,
not 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 ideal.
not ideal, not ideal. Obviously, starting off it can be very tricky. And you're probably a best example of what not to do, what to do, and how you can obviously progress through to the other side. And I think that's the probably the most important thing here. The team of this call is there is light at the end of the tunnel, and
Yeah,
you can get funded. You can do well in the markets if you give yourself time and patience, I guess.
yes.
And I suppose going back to the allure, what actually got you into trading? Why? Obviously, COVID,
Yep.
change of circumstances, change of global environment, both macro and obviously health wise as well. What prompted you to go into trading per se?
So I'm quite analytical by nature, and I started having a look into different, I guess, investing options. I looked into um, training courses and sort of figure out, what do I want to do, what do I enjoy. So um, I started looking online. I looked at a few Udemy courses, which taught me a load of different things, from forex trading to peer trading to a number of different things. And I just sort of and I watched a number of YouTube videos just to try and educate myself and find out what it is I enjoy, I guess. And I I had a little bit of money behind me, which is the reason for quitting my job. My wife was pregnant at the time, so I wanted to support her through that as well. And I didn't actually take to forex trading. Initially, I started pair trading because it was a bit, I guess, it was quite straightforward. And it made sense to me, so I threw a bit of money behind that. I did okay, but it was a little bit boring to me. And I gravitated back to forex trading, and from there, I did what, again, being sensible, I started trading live funds from the start, not having a clue what I was doing. um,
As everyone
and
does.
as everyone does, yeah. And you know, it's interesting because sometimes when you don't really know what you're doing, you can do okay,
Yeah.
because you've got less thoughts entering your head. And so I think in the first couple of weeks, I turned 10 grand into 16 grand. No, honestly, I was trading basically supply and demand levels, and that's really all I knew. I didn't know. I had an understanding of trend lines, but that was kind of it. And from there, I thought, well, let's learn a bit more. So I joined one group online, and started learning about fibs and things like that. But again, not really having a clue, I quickly got rid of that profit within the first week and went, hang on, this is a bit silly. Let's get a proper education.
In terms of the migration, so obviously going from the beginning of not knowing much into where you are now, what would be the primary assets that you would trade now? Are you still directed particularly on the forex side? Do you look at the indices, the commodities? What instruments and assets would you currently trade at present?
So, as in today, I mean, I've gone through the full spectrum of all of those. As it stands today, I'm trading forex, and those would be mainly the US pairs. At the moment, more sort of the euro dollar, cable, UJ. I quite like EJ and GJ as well, but I'm not touching anything with a yen next to it at the moment because of the volatility in that market. But previously, I have traded indices, and I may go back to those in the fairly near future because I have a pretty good understanding on how they move. It's just heading towards Christmas, they are maybe a sensible option, and they're quite volatile at the moment.
Yeah, certainly, certainly. And in terms of the actual strategy now that you're utilizing, would you see yourself as, let's say, a buy and hold or sell and hold type of trader, where you're maybe carrying positions through days with overnight swap fees, etc., coming through into it, or are you kind of one and done day, short term focal point, and kind of nimble in terms of reacting to the shorter term market conditions?
Yeah, so at the moment, I'm more short term. Um, I, I'm not worried about holding a position overnight. I'll quite happily do that depending if I can get on side and I can see the longer term bias. But at the moment, I am trading quite short term, so
Yeah.
in and out. I wouldn't say I'm a scalper. I'm more I'll hold a position for a few hours, or it could be just be for half an hour. It depends on what the market's doing.
Interesting, interesting. And obviously, I know we're going to bring up trading view now in a moment. But
Yep.
in terms of the actual, I suppose the nuances employed within the strategy, would that be more technically based, amalgamation, or combined with fundamentals? Do you look at volume profiles? What would be kind of the cornerstone of your trading plan that you find actually works for you?
So I, I take a bit of everything into account. So I will initially look at the fundamental side first, because that's going to drive what you're doing in a particular day. Where is the market heading? Is kind of the one of the first questions I'll ask. What's happening right now? What's happening today? What's what's on the board as far as forex factory? What's coming out at 7 o'clock, what's coming out at 1:30, what's likely to drive the market, where is price going to go? So that's my, I guess, initial thoughts. And maybe where is it going to go long term? Because I like to trade with the trend. So even if I'm just day trading, I will most of the time be trend trading, looking for pullbacks, and looking to enter, but not necessarily hold that longer than a couple of hours.
Okay. So basically we can kind of, the audience can deduce it's quite a logical, thought out process,
Mhm.
maybe a bit methodical in nature, but there is a reinforcement, there is a clear structure, there's very, very clear dynamics within the price action that you're physically looking for.
Yes, that's right. And so that's I'll start with a high level overview. So generally, I will look at the at the end of the market close. I'll look at, okay, what's the daily candle done on the assets that I'm looking at? Is that indicating that tomorrow might be bearish or bullish?
Hmm.
And I'll show you examples in a second, of how I sort of took that into my thinking to the following day. And then once I have an understanding about what's likely to happen the next day, I'll start building in. Okay, if that does happen, where is price likely to come? And I've got specific criteria on how I will enter a trade
Got you.
the
Okay.
following day.
Interesting. Brilliant. Well, I suppose with that being said, are you able to open up the trading view there, maybe to talk us
Yeah.
through a few bits and pieces that you've looked at or are
Yep.
currently looking at?
Yep. So I'll give you. I'll show you a trade that I took yesterday.
Lovely. Okay, brilliant.
Um, you can see that.
Yeah, I can indeed. Yeah, we can see the trading view screen. Yeah.
Okay, so over the weekend, I was looking at so everything prior to this candle here. So this was
Yeah.
yesterday. So I was looking at this price action here. So as you can see, cable's been on a fairly bearish run for the last um, a few months, and it's sort of consolidating around this area. There's a bit of I'm thinking this may go up, so I'm bullish in this market. But it might just stay here and chop around for a while. But I'm just looking at these two candles here. I'm looking at this indecision candle here, and I'm seeing this candle here with a wick, and I'm thinking, can I see this pushing out tomorrow? And I thought, I can see that. I'm more than likely going to see that than with these bottom wicks, thinking it might come down and wick further. So that sort of determined my bullish thoughts for Monday. So my bias. Um, looking at looking at this on the hourly. So this is yesterday morning. The open. Oh, sorry. The market opened here, and then in the morning it came off. So I started looking because I'm up pretty early because I've got an 8-week-old and a 2-year-old, so they get me out of bed pretty early.
Pretty early.
Um, So I was looking at the market at about sort of 6 o'clock here, and I noticed it had come off quite a bit. So I thought, okay, there may be an opportunity for it to push out. So I then go down to the 5 minute and the 1 minute. And my strategy is really a lot around the ICT concepts. I know they're sort of marmite for a lot of people, but a lot of what he suggests makes sense to me. So I look for fair value gaps, I look for order blocks, I look for liquidity. So looking at on the 1 minute chart, the market had come off in the morning, and then it came down to this level, and then it pushed off. So this is a relatively solid level for now. It pushed off here, created a decent size impulse. I mean, that's not significant. It's 45 to 65. It's a 20 pip move, but it left this fair value gap in here. And I thought, well, I think it's likely to return here and fill that gap, or at least attempt to fill it before it pushes out. So I set an order here. I want to see it close this gap here and have my stop loss down here. So I created my entry at I think it was 48, which is about there, and a stop loss was I had it at 5 pips. Now, and I generally don't look at my take profit straight away. I'll look at getting in, and then thinking about taking profit about there. So it's about 3.5 to 1.
Okay.
Now, as you can see, it came to my price, which was quite good. Unfortunately, the spread of cable is about 1.2 pips, and this only came to like 0.2 pips. So then it didn't actually fill me, so I had to do a manual entry at 51, which was here. So it wasn't as good a fill as I'd liked, but that was okay. So I then reduced my stop loss to 5 pips. And then I ended up so I took profit around about here, and then here in 3 stages. And so I took 3% out of that, and that was me for the day.
Interesting. Right. Okay. So I suppose with that, then there's a very, very clear dynamics. Obviously, using, as you said, they're using the higher time frames down just to get a bit of a macro viewpoint.
Mm-hmm. Yep.
And then the nitty gritty, looking at the 5s and the 1s. So going that low, like I suppose this is the difficulty that some people would have if they trade lower time frames, because when you trade like 1s and 5s, you have to be so precise. And like you literally have to make very, very important decisions in a split second, or often maybe in maybe a few seconds or whatever. And how do you find that works for you? Like how do you navigate around the psychology there and that? Because that's obviously for some that can be a very, very difficult thing, because when you trade lower time frames, there is the potential that you potentially trade more often. Particularly if, let's say, you're not working full time and you've got the time to spend in the market. Like you could trade 2, 3, 4 times an hour if you wanted to, conceivably.
Yep.
If obviously the conditions were being met. So how do you navigate around the psychology of that in terms of like the cherry picking, focusing on the quality, not getting drawn into like over trading, revenge trading. If you, let's say, have had a couple of losses, even the revenge trading is obviously very, very relevant in that.
Yeah. Through practice, you learn what not to do over lots and lots and lots of pain of doing the wrong thing and making mistake after mistake after mistake, and that's the psychology of it. And these days, I'm quite calm in my trading. I don't overtrade. I might trade 2 or 3 times a week, but that's what time allows. I'll probably trade more if I had the time. Um, I guess looking at this, for example, I'm thinking about change of characters. So I know that the market's pulled down in the morning and it's at a nice impulse. It's likely to come back to here. The reason why I'm utilizing a 1 minute is because I want to see this gap here. I want to see this gap at least partially filled. So I know when the market's here and it's broken sort of this high here, because this is obviously downtrend and then it's come across and then it's pushing out. So it's showing me a short-term change of character. I know that there's a fairly good chance this may go up, and that impulse there is telling me, and it hasn't been enough to get over this, so it's probably going to return here before it then breaks out. So, but in relation to why I chose that price, what I do here is I look at where this fair value gap is. So that fair value gap is 475.
Yeah.
I add a pip onto that. So cable, I probably should add a pip and a half because of the spread.
Yeah.
And that's my accuracy there. So I probably should have entered at 49. I would have got in at 49.
Yeah. And
I find trading like this, the amount of times it comes back to that exact price to the pip is actually quite surprising. So that's why what I've realized is trading in this method, when it does return, it quite often returns to that exact location. And I can show you another trade that I wasn't trading in the afternoon. I wish I was, because I took my 3% off in the morning. I was happy with that, and that was me done for the day. But I just kept an eye on the markets. Now, it had obviously pushed out. It came back. It took out these lows a little bit, so it'll probably take out some retail traders, creating a new low for the day. Consolidated, pushed up, couldn't break this high, and then it returned. So as you can see, let's just scroll in here. As you can see, there's your gap.
Your break.
I would look to enter there.
Yeah.
Because you've got this here is pushed out, a
Yeah.
tiny gap in there, but I would probably have my entry there plus a pip. And if I did, there's your entry.
Filtered.
And then you look what it did after that. And it's come off this morning, but that's 115 point move. Hence why I say
for what, a 10-point stop, maybe 12.
On this occasion, so I would have looked at this and thought I'd probably go 2 pips below that. And this sort of comes into how I work out my risk. So I would look at, okay, let's say that's my entry, which is 505. Let's say I'm entering at 52. It's taken out these lows, filled the gap, and I want to have my stop loss below here. So that's where's my price? 43, 52. So I would probably have a 10 pip stop loss on that.
Yeah. Logical.
And that then determines my risk.
Yeah.
Because I will then calculate how much I put on that.
Yeah. And then you can then look at the upside and say, well, if I'm entering at X, my stop loss in this instance is down here, then you can start to say, well, where is my targets? And
yes,
on that one now, I know it's obviously hypothetical, but within that strategy, where would you have looked to take profits on that trade had it been triggered?
That's obviously always the tricky question. I would have definitely taken some partials around here. But if I look at that was what, 3 o'clock. It's in hindsight, so it's tough to say, but it's a pretty strong impulsive move. I'd probably look to take partials here and then maybe let it run, because then you've got the afternoon
run.
And had I known what was going to happen with the yields, I mean, there was clues in the morning that it had hit 5.2,
Yeah.
um,
Yeah.
and then it was chances of it coming off were probably quite high. As soon as the yields come off, that's just going to keep going, and
Keep
that's
going.
exactly what happened. But
Yeah.
you've got to piece all of those together. So I probably would have taken maybe 5 if that was a 10 lot trade for me, taken 5 off there and then let it run to maybe here. I wouldn't have let it run all day, but I
Yeah.
would have made a lot of profit if I'd held that.
Yeah. And I suppose the funny thing is the two trades, the first one was just coming up to the London Open, and the second one from a timeline was just between that first kind of half an hour, 45 minutes after the US Open. So that would also pose the question, would a lot of your trades come between I don't know about a lot of people, but I tend to look at the markets in twofold, right? You've got that kind of 7 to 10 burst in the morning for the London
Yep.
Open, volatility
Yep.
around that, and then you kind of migrate to the afternoon session where you kind of have what around 1:30 into kind of 4:30 into the London close.
Yep.
So would that be kind of what you're looking at there? A lot of your trades are taken during the session opens or close to the session opens when volatility is at its highest.
Yeah. Yeah, definitely. And I would I would I would be careful of any news that's coming out. Like, and I know that, and I've got an absolute rule that I will not hold any trade over news unless I'm well in profit and I've at least banked half of that.
Okay.
Because often what you'll see is, you'll be in profit, it'll go up, and then the news will come out, and you think you're 50% chance it's going to go in your favor or not. Never happens. It always goes against you. So I don't hold trade over news, but what I will do is wait until that news comes out. So I'll wait until obviously the 7 a.m. or the 1:30 or whatever it is. I'll see how the market reacts to that. If the market's going to come off a lot,
Yeah.
I'm going to wait until it bounces. You see, you see the footprint of the banks and investment funds. You see their footprint in the trade, and that's when the impulses are created.
Yeah.
That's when your fair value gaps are created. Most of the time, they'll return to that area, and that's when I get in.
Yeah. Yeah. No, that's very logical. Interesting. So that's pretty good. So in terms of then, I know obviously you took us through the two examples there, which is brilliant. The risk reward, do you look for a set risk reward, or is it just dependent on like case by case basis, reviewing the analysis that's present in front of you, and then trying to make kind of best, I don't like to use the word guesstimate, but sometimes it can be applied to try and determine, right, where is a logical scenario to try and take profit from?
Yeah, good question. I tend to look at the price action.
Yeah.
So if I look at what time we got? If I could look at where I took that trade yesterday, which was
Yeah.
here, I'll watch these candles, and
Mm.
I'll watch them painting, and I'll watch them sort of pull back, and I saw this red candle painted here, and I thought I'd seen that taken out. I thought, well, could this come down here now? I thought, yes, it could. So I took half of that off yesterday.
Mm.
This was quite a good position because my stop loss was tight.
Mm.
I was able to put double the position on because I only had a 5 pip stop loss.
Yeah.
So I was comfortable with taking half off relatively early, which then covered my stop loss. I quite like doing that because then it's kind of a free trade, and then I could see it pushing up, and then I saw it stall, and then I think I took the rest about here or somewhere like that, and I averaged, as I said, I only averaged 15 pips off this trade. It wasn't a very big one because I was able to have a double position on it.
I think the relevant point is there. I think what's conscious is, yes, you've got a very, very structured approach in terms of entering the markets, whether it's 15 points or 115
Yep.
points, doesn't matter. But the number one goal there is that well, maybe not the number one, but one of the primary aspects that I'm looking at there is always protecting the downside, always
Yes.
mitigating the risk, like any institution or any kind of hedge fund or bank, always protecting the margin, the
Yep.
risk associated with. So at least that way, then if it does reverse and the trade is incorrect or whatever the analysis, the viewpoint is wrong, or it goes the other way, you're still mitigating, you're still protecting the downside.
Yep.
And I think that's probably one of the most important things in trading, being able to protect, being able to hedge, being able to just mind or kind of be careful in terms of that at all times, regardless whether it's in the morning, the noon, the night. I
Yep.
think that's really, really relevant. And that's brilliant. So in terms of the back testing, I presume it took you quite a few months to try to really articulate all of this together. I'm sure this wasn't a strategy that probably just came overnight. It took a little bit of graft, a little bit of practice, learning to
Yeah, no, this
practice.
definitely a lot of practice with this particular strategy, and I've tried a lot of different types of strategies until I find something that I'm quite comfortable with and confident with.
Yeah,
I think one of the most important things is you've got to be able to back your strategy, um, and know and not let fear take over, because the problem is and this is especially now I'm a funded trader, and
yeah,
it's actual money rather than paper money. It then becomes you've got to be able to be confident
yeah,
in your strategy, because otherwise you'll just you won't let runners run, or you'll end up taking profit way too soon, and you'll make fear-based errors all the time. And I still make fear-based errors
yeah.
regularly, but it's about over time, you'll make less and less of those mistakes. And for me, trading is not necessarily about being the best trader or having the best market analysis. It's probably making the least mistakes.
Mm, yeah, yeah. I completely agree with you there. And in terms of that, it's just all about building the trust, really.
Mm.
But if you don't test your plan, back test or forward test, whatever you want to use, then you'll find it hard to kind of deduce whether the strategy is actually successful or not, because that's one of the big things. Because the fear comes from a lack of confidence, really, doesn't it? Lack
Yes.
of confidence, a lack of trust within the system. But if you can rigorously test the strategy, because I've seen even in the discords and stuff like that, 4, 5, 6 years of back testing data. Like that is a huge data set for any individual to compile. And I think not that you need to do 5 or 6 years of data, but have sufficient data, have sufficient information to say, well, I know this strategy works. It might only be 50% of the time, but as you know, if your risk reward is 1 to 2, you're going to make money. You're going to progress. You're going to migrate from those 80 to 90% of traders who failed to the 10 to 20 that actually become successful. And I think that's really the paradigm shift, really, isn't it? Migrating from one to the other, really, isn't it?
Yeah, absolutely. And I guess it's getting yourself to a point where it works.
Mm,
So take every available trade that within your pairs
mm.
that falls within that category. Um, because if you look at it from I guess a casino's point of view, the casino they they win provided they take every hand or spin of the wheel or anything like that,
Yeah,
because they know statistically they win. So if statistically you have a winning strategy, you will win as long as you take every opportunity or as many as you can,
mm,
and believe in those. So the idea is it's the mentality of become the casino
yeah,
in your trading. So you've got strict rules, you follow those rules to a T, and just repeat, and then
yeah.
count your bank balance at the end of the day.
Which is a luxury for some. Which is a luxury for some.
Yeah.
In terms of the strategy, one thing I didn't ask, but I think it'd be a good question because some people do this. Are you a one and done type of trader where it's one position, you let it run, or will you like dial in? Will you try and scale in if the opportunity presents?
um I sometimes do, but I don't like to over leverage myself, and because my trades are relatively short term at the moment,
Yeah.
I would just prefer to let that trade run and take profit, not get
Mhm.
greedy. Um, you know, it there would have been opportunities yesterday if I was in that, if I was in this, um, to add a position.
Yeah.
But then
Yeah.
again, you add a position here, and it comes right back here. You've eroded all your profit and everything else. So
Yeah.
I don't know. I'm quite happy just to take the one position, take a bit of money off the table, and
Yeah.
most of the time that'll be me done for the day.
Yeah. Interesting. Interesting. And in terms of, because I don't know about you, but I think trading is a case of you want to constantly improve. You want to constantly
Mhm.
develop and improve. Do you like, would you review your data regularly? Do you journal? What do you find works best for you within all of this in terms of like longer term, like in terms of creating longer term success, longevity, everything that kind of goes with that cliche?
Mhm.
How do you like develop a process for yourself?
Yeah, so I used to have a journal. I used to especially when I was trading previously, um, with the group, I would journal every trade. I would go back over the daily trades, and I would learn from those. And then these days, I don't. I wish I say I would. I don't really have time to journal.
Yeah,
So I learn by looking back over trades that I've done. I try and remember mistakes that I've made and try not to make those mistakes again. But yeah, as I said, because I've got two little ones, getting a trading journal out for something that's, can quite often in my world be quite quick. Um,
yeah,
I could place a trade, take the profit off the table, and be holding the baby at the same time. Do you know what I mean? So, writing then in,
yeah,
in a journal can be quite challenging. But
yeah.
you just need to make sure you learn from your mistakes. Um, if
Certainly.
I if I if I make a mistake that's bad, let's say for example I move my stop loss, which obviously you should never do.
Hmm.
Um, Sometimes there's provision to do it, but if you increase your risk and then take a loss on that risk, I'll reflect on that for days on end. But if I take a bad loss, I might not trade for 2 or 3 days afterwards,
Yeah.
um, because I don't want a revenge trade. I don't want to get straight back in to make that money back, because at the end of the day, if you make a mistake, the next thing to do is make another mistake, and then that compounds. And next thing you know, you've lost your account. And
Yeah.
we've all been there.
Yeah.
But that's not how you're going to keep an account long term.
Yeah. And the thing is as well, compounding, it can work both ways. So obviously when
Yes.
things is going well, you can compound your growth. That's great. Fair enough. But when it's a double-edged sword really, because obviously in the back end, if it doesn't and you make a couple of mistakes, or you make a mistake and then all of a sudden you make a second mistake,
Mm.
and then I do find then it's a case of, well, you could be down 2 or 3%, and then all of a sudden drawdown limits are very, very quickly approaching, and then it's a case of traders lose interest, they become disheartened, and then all of a sudden it's just like everything, the whole plan, the whole process gets thrown out the window with the
Yeah.
backwater. And then it's a case of, oh well, sure, I don't really care. And then you have that like really kind of negative attitude that obviously you want to try and
Mm.
avoid that at all costs, for fear of, obviously, as you said, they're breaching the account. And in terms of like the risk and psychology, the handling emotions, you would put that up there with the most important parts of your plan, I would presume.
Absolutely.
Yeah.
Absolutely. So I'll show you a trade that I'd like that may happen soon. I've just spotted it. So see this here. This is spiked this morning.
Yeah.
Sorry to just to cut you off. It's now come down. It's taken out all these lows. It's held this candle,
Mm.
which is probably an overnight. Yeah, that's probably not a candle, but it's held this low here, and then it's spiked up. Hasn't quite. I'd like to see it take out these first and then come down, but this is potentially something I would trade, because it's spiked up. If it came down to here, you could have a
Yeah.
long position and then look for something in up and around here.
Interesting.
Sorry, that's I just I just saw it. I just saw an impulse, so my eyes automatically go to
Well,
it.
no, what harm? What harm? That's it's good to get, the insights. It's good to get the insights. And in terms of in terms of your journey, so obviously reflecting back on the last 3 years now, what's what's the elements that you kind of enjoy most in terms of the trading? Obviously, I know you're working, you've got two young kids, the trading in the background. What do you find to be the most or enjoyable part of being a trader, being an analyst?
um, Withdrawing. um, when
Love
the
it.
when the payout withdrawal comes along. No,
Yeah.
I think it's for me. It's about mastering something
Mm.
that is very hard. Um, you know, you get into trading and you think, well, this is just a bit of technical analysis. I can learn these. I can buy levels. I can sell levels. Um, there's so much more to it than that, and you learn that over a period of time through mistakes and pain. But being being now that I'm a funded trader, for me, it's about mastering something, and one day that could allow me to leave my job again, and actually have an income that could be stable enough that I could um, that I could be that way. But at the moment, taking money out of the market and putting it in my pocket is and knowing that I've put in years of effort to try and get to that stage, for me is quite fulfilling.
Yeah, I think it's fulfilling for most. I think it's fulfilling for most, if not all. And in terms of your experience, so 3 years in, you've tried multiple things, like you've found out what works best for you, and then obviously been able to harness that, maximize the efficiency, and create that idea of longer term success, longer term consistency. That's obviously the paramount goal. In terms of the background, what do you believe are the most important things to focus on? So if you were, let's say, talking to yourself now as a beginner, or someone maybe new who's coming into the markets who maybe hasn't much experience, where would you be telling them to start?
Good question. So I would start with, looking online, watching YouTube videos, um, getting yourself a proper education. I thought, as I said, I did the 6-week course with the likes of yourself. I had a one-to-one mentor. I had two of them. One of them teaching me technical analysis, one of them teaching me fundamental analysis, which made me a rounded um, trader and gave me that, I guess, foundation. Um, Reading books as well. I've probably listened to Trading in the Zone audio book around about 30 times. Um, and the reason for that is because I don't just want to know it. I don't just want to understand it. I want it to be ingrained. I want those thoughts in my head, because when you're trading, there's so many different thoughts going around in your head. And if you've got positive things in there that are telling you what you should do over and over again, eventually it will actually come out in your trading. So get a proper education. Start with demo. I know a lot of people, they think, oh well, I won't trade demo because it doesn't feel real or anything like that. And if you don't take it seriously, then that's what will happen. But if you trade it like it's an actual live account, and you utilize that to practice to find out what is good, listen to when people tell you trade demo, back test, learn these things. They're the first things that traders ignore when they're new, but they're absolutely vital. So that's the advice I would give: is listen to the people that have done it before. If you can get yourself a mentor, someone that has done this before and understands the pitfalls and has been through it, that could be one of the most important things.
Nice words, good words. I suppose. Well, I suppose in terms of the longer term plan, I know two kids doesn't make life easy in any stretch. Obviously, hugely rewarding, of course. Do you have longer term goals, longer term objectives? Now, I know obviously for someone with two kids, two young kids, it can be difficult to kind of create longer term plans, longer term
Yep.
objectives. Do you have anything in even kind of like minor thoughts in your mind, or is it just a case of take it day by day? Let's build it from
You
there.
know, yeah, good question. So, from my perspective now, I'm not looking to make 10 grand, 20 grand trades and have massive payouts and things like that. I just want consistent payouts, and I want to keep this account as long as I can. So if I can keep the account, I know I will get payouts, whether it be £1,000, £2,000, five more, whatever.
Yeah.
And then I'm just going to withdraw that, and then I'm just going to put it into the S&P. I'm just
Mm.
going to, I've got an account, and I'm just going to put it in there, and that's for my boys, because I know that's going to go up for a period of time, and that's the investing part. So, and we'll probably use a little bit of that money ourselves, but it's, I guess, from myself, and I've got a few grey hairs these days, so I'm building towards the future for my boys. So that's what I want to do longer term, is do that. Look, if I can increase my account size and start having larger payouts down the track, great. But at the moment, I'm just absolutely focusing on withdrawing the money, and I guess um, you know accepting the generosity that Alpha Capital is going to give me as a funded trader.
Love it, love it. Well, Shane, I think that's the best way to end this call. Look, it's been an absolute pleasure to have you on board. Congratulations, obviously, with your second arrival. I think that's hugely
Thank
important
you.
for family. And hugely impressive, obviously, your journey. It's great, obviously, being able to go through it all. I hope the people at home have actually found some use from this call. And if not, they can always ask, because I think you're an active enough member in the Discord as well. So I'm sure if there's ever a question, I'm sure they'll probably tag you in the comments and say, Shane, what do I do here? But no, all joking aside, it's a privilege and pleasure to have you on. And as I said, very, very best of luck for the next 12 months and beyond.
Thanks, Jerry. And I just want to say a very big thank you to you, because you've been a big part of my success in this. If I didn't meet yourself and Neil previously, I think the journey would have been a lot longer for me. So I just wanted to say, a big thank you for that. And you're probably the sole reason why I'm actually trading with Alpha as well. So
It's
appreciate it.
it's good, and I suppose as well, it's just a case of build for the future and continue going. Yeah, definitely.
Absolutely. And hopefully I can inspire somebody to, maybe even if it's just learn one thing from this video, that would be job done for me, I think.
Yeah, definitely.